Hello everyone, good morning and welcome for today's session. Chapter number 2, Secondary Market Operation. In previous session, we were discussing about the meaning of mutual fund. In simple terms, mutual fund is an association which collect the savings in small amount from investors and then invest in government securities, corporate money market instrument, etc. On behalf of such investors, and then earn income from this investment. Then the income are distributed among the investors, those who have invested the amount in mutual fund. It is mainly working on the principle of small drops of water makes a big ocean. So that we have discussed about mutual fund in last session. Now today we will start discussing with the scope of mutual fund. Firstly, a mutual fund belongs to those who have contributed. Those small investors who have contributed the mutual fund, the total fund belongs to them. They all have access to those funds, and thus the ownership of funds lies within the hand of investors and not in the hand of companies. The company who have collected the amount, they do not become the owner of the fund. They just act as an trustee. They take the fund on behalf of from investors and then invest on behalf of investors, but the real ownership lies within the investors. It means whenever an investors want to sell their mutual fund units, they can sell. Whenever they want to buy mutual fund units, they may also buy new mutual fund units. All the decision, all the benefits or losses related with the mutual fund is on the investor and not on the company who have collected fund. They just act as an intermediary, and that is why they are called as trustee of the fund. Then the second scope is, since all the investors cannot take part in management of fund, company has collected fund from many people. Say for example, company have collected 1000 rupees from 1 lakh people. So all the 1 lakh people, it is not at all possible to involve all these 1 lakh people in the management, and hence the company have taken the investment from large number of people. It is not possible to include all the people in management. It is left in the hands of investment professional. The company who have taken money from the people, then the investment of fund, the management of fund will be given to the professional people, investment professional. They will look after where to invest, for what time period to invest, what percentage of amount to be invest. Everything is decided by such investment professional, and in exchange they will earn certain amount of fees. The trustees, the company which collect the money in the form of mutual fund from people, they will appoint such investment professional and pay the fees to such investment professional. Then the third one is the pool of fund, that is the amount collected from people is invested in a portfolio of marketable securities. The main aim of collecting fund from people is then to invest in market. As it has already been discussed that for retail, for individual person, it is difficult to invest in many securities, and large amount of money, investment of large amount of money is difficult, and hence mutual fund collect the money from all these people, and then on behalf of them they invest in share market. So by in different securities, they invest in different securities, and hence the objective of investment in share market thus fulfills. So the mutual fund what mainly does, they collect the investment amount from people and then invest in marketable securities, in those type of securities wherein the company can easily sell whenever the need is arise and can easily buy whenever the company has fund. Now the next scope is the investors shares in fund is represented by units. Like in share market, if you invest, you will get the company's shares, that is equity shares. While in mutual fund, the shares are not given, but the investors will receive units, just like a shares in case of share capital of a company. If you have invested in company's capital, then you will receive shares. In mutual fund, you will receive units. The units value depends on the value of portfolio held by the fund. The total amount of investment is been made by company, it depends on the company's total investment, the amount of units, the value of units. Further, the value of units change almost on every day as the market increases. The company have invested the fund in share market, and hence if the share market, the prices of shares are increasing and decreasing, it will directly affect to the prices of mutual fund. So the prices of mutual fund changes almost on daily basis, and that the changed price is called as NAV, net asset value. The next is generally the investment portfolio of mutual fund is created according to the objective of fund. Now the generally for different objective, the company itself provide the various schemes. The schemes may be suitable for the schemes are like created like which suitable for different objective of people. If some people wants to earn regular income, then there is separate portfolio. If a person do not want regular income but they want to invest for a long period of time, then there is another portfolio provided by company. If a person want to invest for a certain period of time, say overnight or for fortnightly, then a separate portfolio is created. A person want to invest in mutual fund to avail the tax benefit, then another portfolio is created. The portfolio is nothing but a scheme. So mutual fund company provides various scheme, various portfolio on the basis of the objective of investors. For different objective, different schemes are provided. For example, sectorial mutual fund invest its fund in specific sector like IT sector, oil sector, banking sector, FMCG sector, etc. So if you want to invest only in banking sector, then you may invest in a fund which invest in banking portfolio, and your total amount will be invested in different companies which are in banking business. So that is all about the scope of mutual fund, and that is also about today's session. Have a nice day. Goodbye.